Good morning. This is Dylan Giovanni with Behind the Markets. Happy Tuesday. Today is Happy Constitution Day. Today is the National Constitution Day. I didn't even know that actually. As much of a fan as I am about the Constitution. And I brought my son Teddy to work day. Today is Bring Your Son Teddy to Work Day. Wave, Teddy. Say hi. So today I want to talk about the Buffett indicator and what it means for the stock market. So they had asked Warren Buffett a while back, how many years ago, basically, what's the best tool to use to determine if a stock market is overvalued? And he said basically market value to GDP, the ratio of market value to GDP. Now, in our country, we have a GDP that's 28.4-ish trillion dollars a year. And right now, the total value of the US stock market is about $57.5 trillion. So right now, that ratio is 202% above the GDP. Now, this is a very, very healthy, strong, solid ratio to tell you if a stock market is overvalued. It's not a ratio that's going to tell you when a crash will happen. It's a ratio that will tell you just that the market is overvalued. It's a very, very important piece of news. Now, I have a chart on the Buffett indicator going back to 1950, and I'm going to talk to you. The last time it was this overvalued, well, I'm going to go through a couple times in history, just so you understand that we can deal with periods of euphoria and mass delusion and crazy, overall crazy, for a very, very long time. It was this overvalued in the go-go 60s. You can see basically it's got this overvalued in 62, then crashed down in 63, then ran back up and was 64, 65, 66, then crashed down at 67, and then went back up to 70. So it was really overvalued, basically most of the 60s with a lot of good corrections in there. Then it came down. Then, of course, in the 70s and the 80s were basically, in the 80s it started to break down, but 70s were a big crash after the go-go 60s. Then the last time it was this overvalued was in the 2000 dot-com crash, of course, where it hit 202%, actually 201%, right at 2000. And of course, we know what happened after that. Then this is the time that it is most overvalued since then. So it is 63% higher than the historical trend line. So basically, the total market cap of all stocks trades in relation to the GDP of the US economy. This is the nature of it. And it usually trades, 63% lower than it is today. And the last two times that it has traded this high, the market has really crashed. Now, what Buffett would tell you, what any reasonable investor who's been around for a long time is, don't necessarily try to time it. When you see stocks that just go up that are this overvalued, take in your sales, again, to use that expression a lot. Take it in your sales and be patient. And if you see great opportunities, swing at them, but don't chase them. This is kind of what I've learned. And keep your guns loaded for bear, as they say, so that when you do see a great opportunity come across, you have a great opportunity that comes across. And in the meantime, like I am, you're sitting around collecting above average decent returns in federal US bond money market funds. And I mean short-term US treasuries. So anyway, that's all I have today. Just a short video on the Buffett indicator. If you have any other questions about it, feel free to Google that, Buffett indicator. You'll see for yourself this widely used indicator among professional investors, what it looks like. Also, you can also take a look at PE ratio or price to book value and these other tools that are traditional metrics or measures of value. But Buffett always says that his shorthand method of picking or determining when the stock market is overvalued is the total market cap of all stocks in relation to GDP. And it's been two times this expensive since 1950, and both of those times preceded great market meltdowns. But again, in the 60s, it had a lot of choppiness and popped up here for a while, then came down, then popped up here for a while, and then came down. 2000 was just a wreck, as you know. Anyway, have a wonderful day.